Passive income, everyone's dream. I remember when I was just starting out my personal finance journey, I was watching guys like Dividend Magic and a few other US-based YouTubers, and they were all investing for dividends. Every single month, they will get a nice amount of dividends coming in. It's almost like an income, and that was pretty cool to me. These days, it is not really my favorite way to invest because I mainly invest for capital gains these days. But I do acknowledge that it is still a legitimate way for you guys to invest, and I know that a lot of people like having a passive stream of income. If our investments just go up in price, yeah, it's good, but some people just like the feeling of money coming into you rather than, just the value of your portfolio going up. So in today's video, I will talk about how you can build a passive income portfolio in Malaysia. I'll share with you guys some of the options that we have, and I'll also share how I would construct a passive income portfolio that could generate around 1,000 ringgit a month. So let's get to it. Now, let's get to the first step. Before we even consider talking about investments that can generate income for us, the first thing that we have to do is to make sure that all of our cash, all of our savings, our emergency funds are also generating returns for us. Seriously, we don't want to just leave it in a bank account or leave it under a pillow where it's not generating us any money. So the easiest switch, the first thing that you can do without making such a huge change in your finances, I guess, is to start using digital banks that will pay you an interest on all deposits that you have. So some examples that we have in Malaysia are names like Rise, GX Bank, Boost Bank, Aeon Bank. All of these are really good options. I've used all of them. I think right now Boost Bank is giving the highest profit rate. So yeah, I have been, most of my cash these days are in these digital banks. It is earning me quite a bit of money. Another option that I really like is Touch 'n Go Go Plus. I do have quite a bit of money there. The reason I like it is it's extremely liquid because we can withdraw, we can transfer cash, we can spend at any time that we want. It is not like a money market fund where we have to wait, a few days for withdrawals. But one thing to know about Touch 'n Go Go Plus is that it is not a bank, unlike the other ones I talked about earlier. This one is a money market fund by nature, so it is not protected by PIDM. But to me, I still like it because, like I said, liquidity is good, and the way I see it is that I'm going to spend money using the Touch 'n Go e-wallet anyway because I pay for my tolls. Sometimes when I eat, I use QR payments, so I may as well just put some money there. Then, the final option for the cash that you won't need immediately, you won't need it in the near term, for example, your emergency funds, you can put it into place like money market funds. So there are a lot of options in Malaysia like Stashaway, KDI, Versa Cash, which, with the promos they're running, they're actually giving you more than 4% returns. Generally speaking, most of these money market funds will give you a higher return than the digital banks. If you wanted to, if you're a bit more old school, a bit more traditional, and you want to keep your money with a bank still, you can consider fixed deposits. They are pretty good as well. There are some cons to using fixed deposits. I'm not a huge fan, but it is still a decent option. So these are all pretty simple options, pretty easy for you guys to execute. The risk is extremely low. This is the first step that you should make when building a passive income portfolio because you have this cash anyway, you might as well earn some money on it. Now, let's get to the part where we're actually investing money to build a passive income portfolio. And the first place that we have to start is the suite of products by ASNB. This one is an extremely good place for most people to start. In my opinion, at least, most Malaysians should start their investing journey right here. If you are a Bumiputra, then you can go for ASB. If you are not a Bumiputra, then you can go for something like ASM. These ones will give higher returns than your money market funds and even your digital banks. If you are using ASB, you can expect returns of over 5% a year, which is extremely good. Whereas if you're on ASM, the returns are slightly lower, but it's still above 4%. This one to me, it's great because it's a fixed price investment, which means that the value of a portfolio won't go down, but it won't go up either. So the way this works is that every single year, ASNB will pay out a dividend. So what we can expect from this, one thing to note, is that we will not receive daily or monthly payments. Instead, we will receive one big lump sum once a year. So there's that. It is a very good option, but let's move on to the more fun part, to me at least, which is to invest into dividend stocks. This is where we'll be taking on some risk with potential losses. Maybe, the value of your portfolio will actually fluctuate, but there's also the potential to score much higher dividend yields as well as even capital gains. Back then, when I was just starting to learn about all this stuff, every single guy who was building a passive income portfolio, this is where the majority of their investments were. They mainly invested into dividend stocks. So for those of you guys who don't know, this is roughly how it works. So you know how companies make profits? Some companies will decide to pay out these profits to their shareholders in the form of dividends. So let's say I own 100 shares of company A and they decide to pay out 1 ringgit dividend per share, which means that I will get 100 ringgit in dividends. Usually companies will do this either quarterly or semi-annually. Now, let's get into more detail. So first, if any of you guys want to invest into these stocks, then you will need a broker. If you guys want to invest into Malaysian stocks, Moomoo is a really great option. So if any of you guys want to sign up, I'll leave the link in the description of this video. But which stocks should you go for? Now, I cannot speak for you guys. I cannot tell you guys invest in this stock because it will really depend on you and your objectives. But I'll share with you guys some popular examples that you can choose from. If you're Malaysian, which I assume you are, then we should definitely stick to Malaysian companies. The reason I say this is that when we're investing for dividends, we want to make sure that we get the entire amount in dividends as our profit, I guess. In Malaysia, yes, we recently introduced the dividend tax, but that's only for dividends above 100,000 ringgit. If you're already earning that a year, then you shouldn't even be watching this video. But anyway, yeah, the reason we don't want to invest in dividend companies from other countries is that we'll be hit by something called a withholding tax. It's just basically a tax on all dividend payments to foreigners. For example, if we invest into US companies, whenever they pay us a dividend, the US government will charge us 30%, which is way too much, which is why my recommendation is to stick to Malaysian companies. But don't worry, there are a lot of good options for us to choose from our local stock market, which is Bursa. To me, the best option is to go for blue chips just because, they are much larger, they have higher revenue and income, but the most important part is that their income is, in most cases at least, more stable compared to smaller companies. But let's just go through some examples. So first up, we have Maybank, of course, which is, I guess, the darling stock for most Malaysian investors. This is a huge company. They have massive profits and their current dividend yield is 5.7%. That is really high. And then, of course, there is TNB, which is another popular name. Their current dividend yield is 3.8%. And then there is also another banking stock, which I've seen for quite a while because they've been paying quite high dividends, which is RHB. Their dividend is just over 6%. As you guys can see, all of these examples that I'm sharing with you guys, these are my preferences. You guys don't have to follow me, but you guys can see that these are all large companies, large names that basically nearly every Malaysian should know, I guess. The reason, like I said, that I choose this is because these guys, their profits are a lot more stable. Guys like Maybank, RHB, it's very unlikely one year they're suddenly losing money. I would say it's nearly impossible. If that happens, then we are in big trouble. Now, to me, I haven't shared any options for smaller companies because, in my opinion at least, if you want to have a dividend investing strategy where your main objective is to get, cash flow, then smaller companies, it's a bit difficult. Maybe, yes, they will give you a high dividend right now, but when we're talking about stability, when we're talking about sustainability of paying these dividends over the long run, it is a lot less appealing compared to these blue chip names. Also, there's another benefit of investing into stocks, which is you're not only getting dividends, but there's also the potential for capital appreciation, which happens when the stock price goes up after you buy it. So for example, if you guys invested into Maybank at the start of 2024, not only would you receive the 5.7% dividends, your portfolio value will also be up by 15% because last year was extremely good for Maybank. But aside from just stocks where we invest into companies, there's also another very popular way for us to basically get dividends. We can still get it from the Bursa stock market, but instead of investing into companies, we're now investing into REITs, which are real estate investment trusts. So the way this works is that we're kind of investing into real estate, and the dividends that we get is rental payments by whoever is using that space. But even though we are kind of like investing into real estate, one major thing that I like about investing into REITs rather than buying property is that we can still buy them through the same Bursa stock market using brokers like Moomoo. When it comes to choosing what REIT you can invest in, we actually have a lot of different options in Malaysia, and usually it's split by sector. So when we're talking about, let's say, the industrial sector, Axis REIT covers this pretty well, and they have a dividend yield of over or nearly around 5% right now. This is a very popular name in the REIT market in Malaysia. Then there are the retail REITs or the mall REITs, which is probably what I would go for. Seriously, I go to Mid Valley quite a lot because I live nearby, and nearly every single time that I go there, weekends, weekdays, working hours, it doesn't matter when, it's almost always full. It doesn't really make sense to me. But yeah, since I go there a lot, since I shop there a lot, I might as well try and get something back from it, which we can. We can own a partial piece of Mid Valley and Gardens via something called IGB REIT, and they currently have a dividend yield of 4.78%. It's pretty cool, right? To kind of have ownership of malls like Mid Valley. You can even do it with KLCC because there is a KLCC REIT. But that is not just the mall, of course. If you guys didn't know, KLCC have offices as well, which is managed under this REIT. Generally speaking, if we decide to invest into REITs, we don't really expect capital appreciation like, the ones that we saw in Maybank. I don't think it's very likely for REITs to go up 15% in a year. What we're looking for instead is a more stable stream of income because rentals are pretty stable. If you think about it, KLCC every single year, or I guess over time, they do tend to increase their rental rates, and it doesn't matter what they do, occupancy seems to still be very high. It's not like 1 month we go there, suddenly KLCC has no one else, and then the KLCC REIT can't pay us dividends, right? So that's why, in this sense, it's a bit more stable in terms of their payouts. There is one final option when it comes to investing to build a passive income portfolio, which is bonds. So in today's video, I'll be focusing specifically on government bonds because to me, they are a lot safer and a lot easier to invest in compared to corporate bonds. But one upside of corporate bonds is that they tend to pay higher yields. Just to me, it's a lot more difficult because you need to do a lot more research. Governments all around the world, they all have their own bonds. It's kind of like making a loan to the government whenever you buy a bond. But the most enticing one right now has to be the US Treasury bond, just because a lot of people think of the US as very, very stable, and they also have really high yields right now, around 4.3 to 4.7%. So this on paper sounds really good, but again, I just can't recommend it because of the 30% withholding tax. So instead, we're again going back to Malaysian government bonds, and you can invest in them via this website called Fund Supermart. So you can go to their bond selector and filter for sovereign bonds, because these are what government bonds are called, sovereign bonds. And then you can change the currency to Malaysian ringgit just so you can only see the Malaysian government bonds. The cool thing about Fund Supermart is they also show bonds from many different countries. So if you guys are interested in just exploring it, you can check it out as well. You can see that some of the Malaysian government bonds are paying 4.1% yield a year, which is actually quite good, right? And they also show the cash flow you can expect. So you can see this particular one, it pays out twice a year in May and November. But honestly speaking, I don't know if it's worth it for us to invest into these government bonds, because this kind of yield, we can kind of get it from money market funds, some fixed deposits, even ASB. So yeah, I don't know if it's worth it. I just thought, I'll still share it with you guys because it is an option. So if you guys want to, you can explore it further. So having said all of that, how would I construct a portfolio as a Malaysian that could bring me around 1,000 ringgit a month in passive income? First, I would have 30,000 ringgit into ASB. This is my safe, stable option. We can expect, let's say, 5% dividends a year. So 30,000 ringgit, 5%, that would be 1,500 ringgit a year, or 125 ringgit a month. The majority of my portfolio will have to be stocks because it's kind of my favorite and they do have the highest potential for gain. Like I said, we have the best combo, which is dividends plus capital appreciation as well. My stock of choice would have to be Maybank. I would try to buy it at around 10 ringgit per share. They currently pay a dividend of around 60 cents a year, so that would give me a 6% dividend yield. Like I said, this will be the biggest part of my passive income portfolio, so I'm going to dump 150,000 ringgit here, which would likely get me around 9,000 ringgit in dividends every single year, or about 750 ringgit a month. In reality, of course, if I was really going to do this, I would obviously diversify it into at least a few companies, 3-4 different companies. But for simplicity's sake, I'm just going to say I'm going to go all in into Maybank. Now, to hit my target of having 1,000 ringgit in passive income every single month from this portfolio, I will need another 125 ringgit a month, which I'm going to get via REITs. So like I said, because of familiarity, because I go there nearly every single week, I will choose IGB REIT with their 4.8% dividend yield. So to hit my target, I will need to invest roughly 31,000 ringgit, and this will also give me 1,250 ringgit worth of dividends every single year. So in total, that is 30,000 ringgit into ASB, 150,000 ringgit invested into Maybank stock, and another 31,000 ringgit into IGB REIT. So that is just over 200,000 ringgit invested to get 1,000 ringgit per month in passive income. When I say passive, it's completely passive. We don't have to do anything. Now, I know some of you guys might be thinking, 200,000 ringgit to earn 1,000 a month, that seems very out of reach, so far away. I know it can feel that way, but trust me, just start small, start slowly, and eventually you will get there. Now, all of this sounds good. All of this sounds dreamy. Maybe some of you guys are ready to start building out your passive income portfolios, but before you do that, there are some things you need to be cautious about. For one, there are a lot of stocks out there where if you just Google highest dividend yield stocks in Malaysia, you'll see some of these names with incredibly high dividend yields. You can see here in this picture, some of these stocks are showing a trailing 12-month yield of more than 10%. Does it look good? Yes. I mean, who wouldn't want a dividend yield of 40% a year, right? That's crazy. But is it sustainable? Most likely no. Then there's also the case of crypto, or in some cases even they call it forex investments, where they can say something like, oh, we can give you 10%, 20% returns a month. This sounds very enticing, right? We can skip ASB, we can skip Maybank with that single digit dividends. Let's go straight for this. Trust me, in the long run, this will not play out and you can lose a lot of money. Like they say, if it's too good to be true, then it probably is not true. This is a long-term approach, just like with most things when it comes to investing. You have to take your time to build out this portfolio. You can't start out in your 20s just starting to invest and expect thousands of ringgit every single month in passive income. If it was that easy, then everyone would have it, right? Everyone would do it. So yeah, take your time, continuously invest every single month, and you'll start to see that the income that you get from this portfolio will start to go up every single year. To me, building an investment portfolio that will generate us a consistent stream of income is a very cool concept, and it's something that I will definitely do as I get older. Being in retirement age, we need cash. We don't have to sell any of our investments. It's just dividends flowing in and then we spend that money. That is truly the dream. But if any of you guys want to invest into Malaysian stocks, you want to build your passive income portfolio, then check out Mumu. You can sign up with the link. I'll leave it down below. You will get 100 ringgit in cash vouchers and up to 1,000 ringgit in Tesla shares, depending on how much money you deposit. Thanks for watching this video to the end, guys. Give me a huge thumbs up if you enjoyed it and subscribe to my channel if you haven't already. See you guys in the next one. Peace out.